While you're reading this disclaimer, don't forget to subscribe, tap that like button, and make silly faces into your webcam so the FBI can have a good laugh. Hey, and welcome back to the next video. Should you trade futures or stocks or options or Forex? Right? It's a key question for many investors. And in this video, I'm going to explore some reasons why futures might be the better choice for your trading strategy. But first, before I get into anything deep here, if you're watching this on YouTube, go ahead and click on the link in the description to access our free members area so you can get access to these slides, but also any PDFs, guides, checklists. I got quizzes available, any other resources, as well as notifications to my free live trainings. If you want to look over my shoulder, see me trade live, make sure that you sign up for free for our members area, get access to all these resources and more. So, futures over stocks, right? Which one? Now, one major difference between all of these things is leverage. Now, futures lets you control a larger position with a relatively small amount of money known as margin. So, for example, you can control $50,000 worth of futures contracts, but you might only need $5,000 in margin. Now, this allows you to amplify your gains in the market if it moves in your favor, right? So again, I can put down $1,000 instead of buying that asset. I might be able to make $1,000 profit or a $3,000 profit on that $1,000 just by some moves in the market without having to take any goods in, without having to have oil or metals or corn stored in my backyard or anything like that. You're basically just looking at the difference in prices on where you're buying and selling from. That makes sense. So again, this can amplify gains if the market moves in your favor, but it's a double-edged sword because it also increases your potential losses if the market goes against you. Again, this is why risk management is essential when trading anything, futures or anything else as far as that goes. But here's some of the other differences here between this and others is liquidity. There's a lot more buyers and sellers that I've personally seen in the futures market. In some options, and especially according to certain stocks, high volume stocks, sure, absolutely. But again, this is another commonality and benefit of futures specifically. There's more buyers and sellers and more money in the markets, which means that you can enter and exit your trades easier. I don't want to be like, oh God, the trade's starting to work against me. I need to get out. And then the trade closes way below where my stop loss maybe should have been, or I was hoping that I was going to be a break even and then I actually lost a few hundred or a few $1,000s on a trade. You want to be very careful again. And there's always risks with any kind of trading at the same time. I don't want liquidity to be working against me, if that helps. Okay, so here's another perk. Tax advantages. In the US specifically, futures gains are taxed under the 60-40 rule. So this means that 60% of your gains are taxed as long-term capital gains, even if you hold a trade for just a day. The remaining 40% is taxed as short-term gains, which basically is just like your regular income. So this means a lower tax bill compared to just short-term stock trading. So again, by the way, this is not legal or financial advice. I'm not a tax professional. So please consult a licensed professional, preferably in your local area that's familiar with your local laws and regulations to discuss all this kind of stuff, right? So all that being said, I'm still going to cover this in a little bit more detail in a future video, so be sure to like and subscribe and watch this entire course on YouTube, and also, like I said, in my free members area with all the downloads and resources in one convenient place. Now, I wanted to go through some additional personal experience when it comes to this, working with other of the instruments. Like I said, this isn't just about futures. How do we compare this with options, Forex, and other potential ways to trade? So stocks in general, I don't typically trade stocks. I'd rather hold stocks long term personally. But a great way to day trade or swing trade is with options, right? For me, it was way too confusing. Maybe I was just way too young in the trading game in general, and I just didn't understand why I was getting into trades or when to get out of trades. But for me, it was honestly just way too confusing. If you've ever looked into doing options before, there's something called, quote, the Greeks. So there's theta and deltas and all these different Greek symbols, and it's just what do you mean? I should be out at this trade at break even, but because even though the price of entry and exit would have been the same, the actual value of that option has gone down due to time decay. So for me, it was like there's too many things working against me. And in this case, many people that do options trading are like, well, we do zero date to expiration, zero DTE trades. Well, that might be good, but if you're going to do that, then you're only trading on days that those particular options expire. What about all the other days? Right? I want to have more options, not necessarily less options when I trade personally, right? But again, for me, it was just way too darn confusing. Now, Forex, I went really deep into Forex. So I did a lot with automated trading. At one point, I had actually used a particular company that was trading for me on their own offshore broker. I ended up getting scammed out of $125,000. So if you are going to give someone else access to your accounts, you better be darn sure that you trust them. In my opinion, if you're a new trader, and no matter if it's $100,000, $10,000, $100, or over $1 million that I've known personally, people that have actually gotten scammed out of that much, 7 figures, because they were trying to use these algorithmic trading brokers and everything. I don't recommend it. Another particular thing here with Forex is it could be EAs, automated algorithmic trading. A lot of people are trying to use quote unquote AI, even though it's not really AI. It's just a few lines of code in their algorithmic trading, bots and everything. It really, I hate to say this, we're all lazy in a way by default. Like, we want to have a shortcut. We want to have some way to work around and shortcut different things and get to that result quicker with less effort, right? We all would like that pie in the sky kind of a result, right? The problem here is I think a lot of these marketers feed on that and that greed and that laziness and say, hey, just put $100,000 of your own money into our trading bot and you'll be a millionaire next year, kind of BS. I don't particularly agree with those, and virtually every single one of them that said hands off blow accounts. Even the owners of some of these companies have come out and flat admitted on their YouTube videos or even in their ads in the comments that people have blown accounts entirely. 50 grand, 100,000, over $1 million of blown accounts. We don't want that, obviously. I have used ones that were successful, but 100% of the ones that were successful did require manual intervention. So again, just being real, if you're making money with Forex, first of all, it's going to probably have to be on an offshore broker, because the only way that you're going to make any money is with enough leverage in Forex. If you're on a US regulated broker, your leverage is 1 to 50. That's it. That is not a lot. You're not going to make a lot of money. A lot of these offshore brokers could be 1 to 500. As a matter of fact, a few of the actual brokers that I could potentially recommend, that I won't because this is a futures course, are offshore and have around a 1 to 500 leverage. I know of ones that say 1 to 1,000, 1 to 2, or 1 to 3,000 leverage, which is just insane. Again, even if you're profitable with some of these traders, it's not so much about just being in the very small percentage of people that are profitable with the trades. It's also about the fact that a lot of these offshore brokers just flat out steal your money, unfortunately. You'll be left in cases where a trade doesn't close or some BS happens where all of a sudden your account is just empty. Again, and that's what you risk doing offshore brokerages. For me, after dealing with the confusion of options and whether it's being scammed out of money in Forex or being screwed over by a brokerage in Forex, or the fact that even when I was profitable in Forex, I always had this worry of like, am I going to be able to pull out my profits? And even if I am I going to be able to pull out my initial capital that I deposited into that account? That was always a worry for me. And this is always what directed me to futures. Why? Because I'm on a US regulated broker and I still have the ability to have great leverage, which is if I'm risking $1,000 in a trade, I can still on a 1-to-1 make $1,000 profit in that trade. I typically go to 1 to 3. So if I'm risking 1,000, my goal might be to make $3,000 that particular day or week or whatever it is that I'm in that trade for. So again, futures for me gives me all the benefits of being able to trade with leverage, with all these potentials for profits, with the liquidity and everything. And at the same time, I'm on a US regulated broker where I'm not worried about being scammed out of my money. So again, does lots of benefits to futures. One, leverage. You can control a large contract value with a relatively small amount of capital. Again, more risk with any kind of trading, but more reward. Liquidity. You can easily and efficiently buy and sell contracts. You're in and out of trades quickly because of liquidity. And then tax efficiency. There's many tax benefits, especially with the 60-40 rule. So again, if you guys have liked this video so far, make sure you like and subscribe, and we will see you guys in the next video.